What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
Today I'm joined with Brent Barcus. How are you doing today, Brent?
Hey man, doing great. Thanks for having me.
Oh, my pleasure. And I got some great news for you, Brent. Today we are joined by my very favorite member of the audience. And why is my favorite member of the audience here? It's because this is a chance encounter. It's where I interview commercial real estate syndicators, investors, operators, sponsors, and all that kind of stuff. You may ask yourself, why would you do that? And the answer is, if you know about off-market deals, sometimes they're called private, sometimes they're called 506B syndications. Well, you need to have documentation of your prior substantive relationship, or else the SEC will get ants in its pants. And we don't want that, do we? So before we get too involved into the details of commercial real estate, Brent, do you want to say a thing or two about yourself? I'm imagining it has something to do with country music. Just throwing
Yes,
that out there.
absolutely. Hey, Brent Barcus here. Happy to be on the show. I live in Nashville, Tennessee. I'm a multifamily investor and love Nashville. Big fan of the market here. I grew up in St. Louis, but moved to Nashville as a very young, aspiring musician, and found my way into the music business for many years. Entertainment. I was a sideman to many stars. Was the role they would say we are. We were a sideman to the stars on the road. So did that in country and pop and rock and all kinds of different music and film and TV in between. So, but passionate multifamily real estate investor now, and still have my recording studio, which I'm in, but I enjoy both.
I love it. I love it. Especially, I don't make too big of a deal about it, but I'm Canadian too, like
Hey,
Shania
man.
Twain. As a
Yeah.
matter of fact, also from Ontario, like her, if
Nice.
my recollection
Yes.
serves.
Yeah.
But the first segment that we always go through in these chance encounters, it's the five distinct motivations. But before I do that, I gotta say, but wait, check your eight. Hey, Brent, I don't know if you have some sort of way to see through the camera and into the user's device down there, but there might be this hideous subscribe button, and maybe
Mhm.
okay, it's a stupid joke, but whatever. The five distinct motivations. I've spoken to all sorts of different sponsors and deal finders and investors, and everybody, of course, has their own unique reason for why they're making these next acquisitions. But it's important for us to know what those motivations are, just because these deals take months to close, they take years to go full cycle, and there's also plenty of risks. So you need to know why this person's going to follow through with it. And I find, even though we have our unique whys, they fit pretty cleanly into these five different categories. The first one of which is preservation of purchasing power. What on earth is that? Well, some people don't have a W-2, and so the way that they pay their bills is from the proceeds of ownership. They have a portfolio of assets that pay them because they're the owner, and that's what they use to pay their bills. But if inflation rears its ugly head, or if there's a steep discount because of distress or an asset crash, that's when people like that are going to get back into the market and make their next acquisition. And that's a perfectly great reason, but I'm not there yet. What I'm up to is trading time directly for deployed capital, aka equity or wealth. And to give some background on that, I got a background in technology. Specifically, it's the CRM, mass marketing software, and online funnel building for events and courses and products and things like that. And starting in 2014, I started to do that for real estate companies. And my boss at the time, he'd been involved in 10 different single family house transactions per month for years before he even met me. But once I found out that there's actual real money possible in that, I was like, okay, well, I need to figure out how to pivot and instead of paying like basically half of my salary to tax, then instead I'm actually getting rewarded in these shares. But that's a little bit too subtle for a lot of youngsters. Generally, a lot of people, what they want to do is they want to take control of their schedule. And it might mean that they want to fast track their retirement, which means hustle like crazy right now and then retire early. But it might just mean they want to have the freedom to work fewer months per year or fewer weeks per month or something like that. And that's what they're up to. And a lot of people who have that as a motivation, they think it's a hidden motivation of everybody. But I assure you it's not. And the next two will illustrate that. The first one, they are more motivated by ambition, and they, want to buy their entire hometown and make sure that their great grandchildren never have to hold a day job. And that is why they're going to hustle into their 90s, which makes them fantastic members of the GP team. You know why they're going to stick around. And the last group, they're going to stick around not so much for their own family, but they found a sector of society, or maybe it's the environment, maybe it's animals. Regardless of what it is, they want to send people out into space. There's a financial component to it. If you want to make a really big impact, you need to have a balance sheet that's quite sizable. And that's why some people look to commercial real estate to make that happen with the equity multiples and whatnot. But Brent, of those 5 different motivations there, what combination of those would you say describes you best?
Man, let's see. I would say, was it number? Do I need to give you a number? I think it was the one for trading time. What was the time? Second one?
Time for wealth. Yeah, that's the
Yes.
second one. Yep.
Yeah. And also I think definitely that, and just realizing, things I want to be able to pass down assets to my kids. So I think family is on mine as well. So.
I love it. I love it. And that's the thing. It's so common this day and age where we just can't spend the amount of time with our families.
Oh.
They're supposed to be the benefactors of everything we do. It's a pretty terrible trade-off. But enough of those rainbows and cheeriness. Let's talk about risk. And
yes.
The tolerance for risk assessment question in Chance Encounters comes from if you've ever been involved in one of these off-market deals, these private syndications, these 506B deals, the securities attorney in the mix should have insisted that everybody fills out this questionnaire. It was super invasive financial questions. But the one that I honed in on was the tolerance for risk question, because I felt like it didn't give me an answer that you could really take to the bank, so to speak. And so I made my one, which is a fill in the blanks question. So Brent, there are many popular investment asset classes, but I think blank is too risky. So that can be inside real estate, it could be outside real estate, it could be both if you want. What's too risky for you?
I stay away from retail space. No strip centers for me. No small mom and pop businesses. They are too volatile, go in and out of business too quickly. So no retail for me. No strip centers. Yep.
I love it. I love it.
Risky. Too risky.
I definitely get that. You have to go with what you're comfortable with for sure. But speaking of what you're comfortable with, some people in commercial real estate, they are the outbound public relations, investor relations types, and they're not necessarily going to be underwriters. They're not necessarily going to be able to read into the spreadsheets and really get every single metric. But regardless of if it's you or if you're at least even talking to people about commercial real estate deals, you're going to be emphasizing certain numbers. And what I want to do is I want to make sure that if you're talking to Brent down the road, which numbers are really speak to him and which ones are kind of just going to bog down the conversation. So for anybody in the audience who's just listening and not watching, I'm going to read out this list. There's 14 right now. And we're going to try and keep it down to that. But here we go. First one's cash on cash. Second one is IRR. Third one is cost per door. Fourth one is NOI, which is net operating income. Then we have going in cap rate. And that's kind of referring to the difference between that and what's normal for that region. Next one is the loan interest rate. After that is the occupancy. Most of my guests on this show are in multifamily, so occupancy is the way that you'd refer to that. Next is average income in the area where the property is located, amortization period, market versus in-place rent differences, the population growth where the area is located, the sponsor record, which has to do with how many deals have already gone full cycle, how many are on the go and working well right now. After that is the waterfall or the split, and part of that is also the exit strategy. It's going to be an important part of that bit. And then last one is debt service coverage ratio. In other words, how buried with debt is the deal. So Brent, I get that all of these are important, especially if you're an underwriter. But which ones, maybe top three or something, do you focus on?
Great question. One that's jumping out at me right now, first off, is NOI. I love that net operating income. So it's telling me what the actual asset is producing, and we always love that. I'd have to say my second would be going in cap rate, giving me an idea of when I go to my investors to raise capital, I can start to talk to them about what type of money they're going to be receiving with that, and also the cash on cash. They're always asking me what the COC is going to be. So I'd have to say NOI. My going in cap rate to see what it's going to be producing when we buy it, and then the cash on cash.
I love it. I'm just eating it up like a
That's right.
subscribe
Hit that.
sandwich. It's
Right.
very subtle, I know, but it always reminds me to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. It's definitely leaning more towards the apartment complex, aka multifamily investing. And in every episode of Dan Does Deals, these chance encounters here, I go through all 6 sides, and the reason is because this way you will be able to understand what role my guest has in their next deal. And if you want your own copy of this, as I suspect you will, you just go to dandoesdeals.com. It's totally free. And like a complete dummy, see, there's a cardinal sin of marketing, which is giving away your freebie without getting some sort of contact information in return.
Right. Yeah.
And I didn't do that because I
Supposed to be
want
a
to make
lead
sure.
magnet.
Exactly. That's my lead magnet, but still, I'm just going, you know what? I want you to print it out. I want you to practice it. Okay, fine. It says Dan Does Deals in big letters there. It's going to help you remember. But anyway, the main thing is I want to make sure you can effectively communicate on the subject of commercial real estate, because if you intend on making this part of what you do, your success is going to hinge on your ability to explain all this stuff. So let's get started. Most people, when they get started, they're some sort of repositioner, or maybe they're the boots on the ground, they're the local. But the repositioner has to do a whole whack of paperwork, and they have to look at a whole whack of different properties before they make a move. And why are they called repositioners, or at least why do I call them repositioners, is because they're trying to find upside. They're trying to figure out how can they make this property make more money than it is right now. Now, of course, what's the paperwork that they're doing? Well, that's what I called underwriting earlier. They're doing the arithmetic. They're doing the math. They're figuring out what's going to happen to taxes and insurance and all that kind of wonderful stuff. But they're figuring out too, is this seller slash broker even telling the truth about how much this property is making right now? Because, but anyway, the first thing that's a little bit counterintuitive about repositioning is you have to have a vast network of financiers. So that's people, they're not on the GP team. They only deal with the people who are running the place, and money and paper, and that's it. Okay, so you need to have a lot of financiers as a repositioner, because if you can secure a more advantageous loan, that goes straight to the profitability of the building. So that's why repositioners need to know a ton of them. But the next part is they're going to take a look at operations and say, where are those Benjamins going down the toilets? Now, of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns. And if you're like me, I focus on apartment complexes with 100 units or more. And frequently they outsource operations to a third-party property management. So what role can a guy like me end up doing? Well, there are a few. One is because of programming and the tech, I can end up automating a lot of the regular things. But the bigger one to understand is, even if you're outsourcing, vacancy is the enemy. So if those units aren't getting filled, somebody on the GP team is going to need some serious marketing chops and step in to get those units filled. So that's one of the things I contribute as a GP to these deals. But of course, you can only do so much in operations as a repositioner. So the next place you're going to look is getting a contractor team involved to do a value add, to upgrade the units, to make the property nicer. And if the place is nicer, then the next residents are likely to be more than happy to pay more in rent than the previous one. So that's why they do it. But of course, you can literally spend endless amounts of money on contractors. You could go ahead and gold plate the toilets, but you're not going to get a return on investment. So you really need to keep an eye on these guys to make sure that they're telling the truth about the materials they're using. They're not cutting any corners. And if you're like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need those locals. I need those boots in the ground, somebody who can be there in an hour or two, because I still be stuck at an airport in an hour or two. So those locals are absolutely vital to the GP team. But once the repositioner has found that ideal property, they've assembled this team, they turn around to the financiers and say something like, hey, I got this 350 unit apartment complex. It's tens of millions of dollars. You don't happen to have, I don't know, tens of millions of dollars you want to lend us to make it happen, right? Well, the financier is going to have a little bit of a problem with this. So let's do a hypothetical. You're the repositioner. Let's say you're an engineer or an attorney or a physician or something like that. And you're going to team up with your circle of friends. You're going to put your 50K, your 100K, 250K in each as the deposit and take over that 350 unit apartment complex down the road. Well, the flaw in this plan, and if you've taken a mentorship or you've got a guru right now, you're going to want to listen closely because they tend to gloss over this next point. The financiers are going to ask, who's the sponsor? Who's the KP? What's that all about? So the bank is not going to consider you eligible for a commercial loan unless somebody in the fold already owns a similar asset. So unless you can find somebody who already owns a 350 unit apartment complex, you're not going to be eligible for the loan. But on top of that, you also need a certain amount of liquidity. And then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you got all that, you got yourself a commercial real estate deal. So Brent, as far as you personally, we all have our own unique skill sets. Which sides of that die you think describe you best?
Yeah, well, let's see. A couple of those. I try to play as, obviously a team player. As you know, it is a team. It's a team business. It is. So I would say mine is local. I definitely am focused on the Nashville MSA. So I am a local boots on the ground to help provide that speed of overseeing anything that's going on at the asset, whether it's checking in with property management, helping out with any value add stuff locally. I can be there in a matter of 30 minutes or so, because most of my investments are in Nashville, Tennessee. So I provide the boots on the ground as a local. And the other is, I guess, financier, not on the debt side, but I'm a capital raiser. So I would be one that would go out as a co-GP and help bring in the capital needed from the passive investors to close the opportunity. So I would say the capital raising and the local boots on the ground.
I love it. I love it.
Yeah.
So then now you've already described part of the answers for the next section, which is the buy box. And when commercial real estate people in general are saying, hey, what you looking for? What's your ideal property? What's your buy box? We're really asking for three things. The first one's geography. Where is it? Okay. Which state? Which county? Possibly even which neighborhood. Okay, anybody who's serious in this business, they're going to need that level of specificity more often than not. So that's the geography. Second one is size. Now, in multifamily, the way you define size is by the unit count. And the reason why it's super important to know what sort of unit count the person is interested in is because the type of team that takes over a 15 unit, in other words, apartment complex, is going to be completely different from the type of company that takes over 150 unit apartment complexes. So that size is definitely going to matter, and other types of commercial real estate might go by square footage. But the third one, they often call it class. I like to call it desirability just because it's separated into two different parts. The first one's condition. So how old is it? How beat up is it? How many luxuries and amenities, like how nice is the place in general as far as the condition goes? Okay, so that's condition right there. But the area, it's a few different things. And if, especially if you're talking about apartment complexes, then the school districts are really going to matter. But regardless of what kind of real estate it is, the crime rate is always going to matter. And then, of course, they also have that old trope of location, location, location. I don't like that because I don't think it's very informative. I think what they're trying to say is traffic, traffic, traffic. If you've got a gazillion people going by a certain location every single day, it's going to be more desirable than a place that's crickets. But
Absolutely.
both the area and the condition are both ranked the same way as in grade school, where you got A plus at the top, and then A minus, and then B plus, and so on. So Brent, I know that you already mentioned that Nashville is the main focus for the geography, but what else can you say about what's ideal for you?
Absolutely. Thanks. So true. I am suburbs of Nashville. So I get even more specific, not the core, where there's a lot of Class A being built in the core downtown Nashville, but we are suburbs of Nashville, 1980 or newer. And we are a light value add investor, Class C plus to B assets. Like I said, in the suburbs of Nashville, 1980 or newer, typically in that 20 to $30 million range with nice amenities, but definitely a value add play.
All right. I love it. I love it. And that brings me to people. So, the nice thing about the diversity of the different roles in commercial real estate, it means that nobody can possibly be all six sides for any meaningful amount of time. We're all going to bear down on one or two sides, a combination of them, and do our best work as that. So, we're all going to have a lot of motivation to build new teams, help people create new relationships so that we have more peers across the nation. But at the same time, because of our unique skill sets, we're better off helping some people more than others. Me personally, traditionally, I've always been looking for the sponsors and KPs just because, as I said, I'm from the internet. So it really means I can only work with people who already have some sort of foundation put together. Because when you're first starting out as a repositioner, you need grunts who are going to be putting in 80 to 120 hours a week. And that is not how I am most effective. That's not where I make the biggest difference in a company. So that's not me. So the locals and the sponsors are the people I'm looking for. Now, Brent, I don't know if you have any 506B deals that are on right now, but if you do, don't mention them specifically, especially if you mention looking for financiers. But who's on the die and in the camera that you can help most?
So what I'm looking for the most, or people that I could help, I would say sponsor KPs. If anybody that loves the Nashville market, wants to invest in Nashville, like I said, love to be a part of any GP team. I'm always looking for the top asset managers that want to invest in Nashville, and the suburbs. So anybody that wants to come and invest, I'd love to be boots on the ground. I can help put together the teams here in town, and the other pieces that we need, like the cube there. So I'd say the sponsor KPs that love the Nashville market, want to get in here, would love to be a part of any deals. I do have a B deal, but that one's in Georgia. It was one of my first deals, but I've got a couple C's going here in Nashville. So if anybody interested, I've got a few C deals going right now, which we can't advertise, but anyway.
Right, exactly. But I do have a question for you since you mentioned it about Nashville. So when a mullet is described as Nashville in the front and Memphis
Yes,
in the
party in the
back,
back. Yes.
right? So is that an insult to Nashville or Memphis or
I think
both?
it's a dig on Memphis right now. If you say, yeah, Memphis in the back, I think you're poking fun at Memphis. But I'm used to it being, business in the front, party in the back, and then you're not really insulting one demographic, I guess, or city.
Okay. That's good to know. That's
Yeah,
good to
yeah,
know.
yeah. I've
So
had my share of mullets. Believe me.
well, don't worry. I love the epic thing you got going on here.
Yeah, yeah,
I always use the opportunity to have a billboard on my
yeah. I
fourth
like it.
floor.
You get, yeah.
Right, exactly. Always be branding, right?
Right.
But speaking of which, you might be sitting there thinking, oh, wow, I really need to hang out with these people. And how on earth do I do that? Well, fortunately, I got this super distinct last name. It makes me really easy to find on LinkedIn. So send me a connection request on there or follow me or whatever. You just go ahead and send a connection request. The worst thing I'm going to do is keep you as a follower. So I don't report people for adding me or trying to. But if you use your phone to scan this code right here, that'll bring you to the FAQs page of 506BME, which is the platform where I help people, syndicators, with their IT to document their substantive relations with their investors. Because if you ever get audited by the SEC, they need that documentation. And if your laptop falls into the bathtub, your documentation might get destroyed, and so I can help with that. But Brent, if people want to reach out to you, social media, email, phone, website, what are the best ways to reach out?
Absolutely. Thanks. LinkedIn is number one. Please, I'd love to connect with you there. So shoot me a follow. Brent Barcus, Barcus. Email Brent at i65capitalinvestments.com. And the website is i65capitalinvestments.com as well.
I love it. I love it. And the only thing I have left then, it's actually not so much for you, Brent. It's for you in the audience. It's my public service announcement. If you've been watching this episode and experiencing searing pains in your eyeballs and like migraine like symptoms, I'm confident it's because of the hideous. It's really bad. There's a subscribe button down there and you can get rid of it for free. And I'm biased. My full disclosure, I want a lot of people to click on it because then YouTube will actually start to pay for these videos instead of
Yeah.
me. I think that would be amazing. And as far as the trade-off to you, just so you're clear, it means my videos may show up on your list of suggestions. But honestly, you can just ignore those suggestions because frankly, I just appreciate the fact that you spent this time with me. Just like Brent, I appreciate you joining me today. This has been great.
Loved it. Thank you so much. Enjoyed it.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.